Hello and welcome to an ACY Securities video special. Today I'm standing right outside the front of Guardian Vaults to go and have a little bit of a chat about gold. Now in any asset class, whenever you are actually investing, it's important to know what's going on within that market from the consumer level all the way up to the CEO, depending on what that market might be. In this instance today, we're going to be looking at gold from the physical world and getting an idea of what the trade looks like on that side. Hello John, Philippe, how are you both? Thank you very much for having us today. I appreciate it a lot, and it's obviously going to be great for some of our people that might want to know a little bit more about gold. Now today I'm at Guardian Vaults, as I was mentioning before, and I'm with Philippe and John, both members of the Vault here, and they're going to give us a bit of a rundown on what's going on. So Philippe, could you give us a bit of an idea about what happens here at Guardian Vaults?
Okay, well, Guardian Vault is the oldest private secure facility in Australia. We've been in existence in Melbourne for over 18 years. This facility was purpose-built about 10 years ago, and we've got the highest secure facility in Australia. So what we do here is we provide storage facilities for clients that want to store anything from their personal items till, of course, gold and silver. And we also have got our gold department where we sell gold and silver. And that's where John comes in, that's his specialty.
Excellent. So when it comes to the gold side of things, I mean, is that now a main attribute of Guardian Vaults?
It's definitely one of our big aspects because we like to talk about a seamless solution, so you can actually buy gold and silver and then store it, and then when you want to sell it back to us, we'll also buy it back. So everything can be done in one location.
So there's a lot to really discuss on the idea of how the gold and the silver side of things actually work for the rest of this video.
Yep.
And where we decide next is really going to be talking about what we might anticipate from maybe a macro or a micro level, but more importantly from your perspectives, I'm really keen to hear a lot more about what we might see on the learning side, on the physical side of the trade instead of just the online like I'm used to. So let's get to it. We're going to have a look at a vault and we're going to get a bit of an idea, a bit more about the physical world of gold. After you, gentlemen.
All right, let's walk through. Yeah, so each customer gets an individual code and we scan their hands and that's how they have to access. So cool. I'll put my code in, so you can't get in here without this. And then it pops up on the guards and he will recognize us and we'll walk through.
Well, that is an impressive door, but this one looks a hell of a lot cooler. What can you tell me about it, Philippe?
Well, this is our main door for our vault, and it's actually not just for show. It closes every night and it goes on a timer. So once we close this door, it's impossible to enter between the hours of 5 and 9. So it's been purpose-built in Miami and shipped over. It weighs over 4 tons, so it's definitely one of our impressive features here.
So there's 4 ton of door on this, and it's all automated in the way that it closes itself. There's no one actually has got to come on this side and drag it across?
No, we actually drag it across and close it manually. It's actually surprisingly easy to move when you get it going. So
it's just if you want to try and stop it again.
It's a bit harder. So yeah, people are always very impressed with this door.
I mean, in terms of this door, I mean, there's obviously multiple levels of security to get in. You've got vaults on one side here. There's another one as well. Yep. What are some of the things that you might find as being the most common product for Guardian Vaults? What is it that people like? Do they like the little box? Do they like the big box?
We've got a lot of little boxes, and people that rent the little boxes store anything from their personal items like passports or pictures.
Yep. Then
we've also got the bullion safes where people go into larger items like the bullion. But in these vaults, you can store basically your jewelry, your personal items, and then we've got in our other vault where we've got the bigger items where you can store up to a couple of ton of silver or gold if you'd like to.
John, can you tell us a little bit about what type of products are kept behind in this vault here?
Yeah, sure. I'd say majority of the clients that are storing here are storing either gold bullion, silver bullion, jewelry, documents, and other valuables including like pink diamonds, for instance, is quite popular as well. But in terms of our larger safes that we have in Vault 2, silver is very, very popular as an investment class at the moment. So when you think about silver storage, pretty quickly you can build up pretty large capacities and weights. So we cater to investors from all different sizes.
So what's the heaviest sized storage of silver that you would typically see? What's the absolute maximum you can handle?
Well, our gram bullion safe holds 3 ton. So
just under the weight of this door, but
correct,
you know, I still can't drag it out of here.
Yeah, so and if you think about silver, like $1 million investment in silver is a ton of metal. So yeah, a lot of our larger safes do get utilised by just individual investors, self-managed super funds and family offices and the like.
So it's not just, you know, for the retail person who might be interested in investing in silver or gold to try and offset. They're actually, you know, you've got corporate entities in here as well who are using it to make a store of value somehow.
Absolutely. Yeah.
Okay.
Yeah.
And what type of sort of customer is the typical customer that you actually get coming in here looking for a vault of whatever size it may be?
Yeah, it just ranges. You get all kinds of different investors that are out there. A lot of people at the moment are kind of concerned about, you know, the stock market being a bit bubbly at the moment.
Yep.
They're thinking that, you know, equities could come crashing down and that could really increase the value of gold, for instance. So just people from all walks of life. You get the investors that are holding, say, you know, a few ounces of gold or thereabouts, right through to the, you know, larger self-managed super funds, which is very popular for gold and silver as well. So pretty decent range of clients, really. Yeah.
Okay, so we've got the who, we've got a bit of the how they sort of do it with obviously the vault here and what they're keeping. Why do you find that people do want to do it on the whole? Is it, you know, obviously right now we've seen a lot of frothy markets going on and we've got an obvious reason for that. Mm-hmm. But what would have contributed to someone wanting to go and get an investment in silver or gold or to store pink diamonds down in a vault like this? Yeah,
so I think when it comes to investing in gold and silver, you've got a few different options out there. You've got, you know, CFDs, for instance, you've got, you know, ETFs and things like that. I think our clients definitely have a focus of taking physical possession of their metals.
Yep.
If you think about gold storage, it's actually quite cost effective to store gold. For example, if you wanted to buy $1 million of gold and actually store it in the most cost effective way, it'll only cost you $272 a year. And that's the price of a small safe deposit box, right?
Okay.
Because they hold around 20 kilos of weight.
Yes.
So physical metal, you know, compared to what most people might imagine, it's actually very cost effective to store the physical product. So our investors think, you know what, if it's cheap to store, I'm just going to go out there and get the physical metal rather than worrying about, you know, the terms and conditions of a product or, you know, hidden sort of fees and that sort of thing. They know exactly what they're getting, exactly what it costs, and they've got the actual physical possession of it.
So what about when people actually decide to come to you guys? Because you guys sell gold and silver as well as purchase it from whoever it may be.
Yep.
So do you often get, you know, cross transactions that are coming from perhaps different currency pairs or other varieties of exchange that go on with that as well?
Yeah, you often get investors, because we also have investors that are based in the US. So you might have investors that want to use US dollars to pay for gold and store it here in Australia and things like that. So I guess our clients predominantly on the gold and silver side of the business are all AUD investors, so they're watching the Aussie dollar gold and silver price more than anything.
Yep.
But there is an element to you know, some of those larger clients that might hold other currencies. They might look at the market and go, you know what, I've got some US dollars. I'd rather, you know, put that in the gold right now because I think that's going to drop. So
when that sort of scenario happens, where you do get someone from international sort of transactions, or perhaps perhaps you are selling to someone internationally who wants to get a big order of it, and they're paying an alternative currency, do you guys have to sort of hedge your position a little bit on the currency fluctuations as well? Yeah. Or does that not phase you guys too much?
Well, typically everything comes down. It's all doable. So if someone wants to pay in USD. And then convert. It's quite easy to convert to different currencies. So most of our business is done in AUD here domestically, as you can imagine. But when it comes to gold and silver, the cost to buy the physical metals and the cost to store is quite minimal. So obviously there can be some currency conversion costs, but when you factor everything in together, it's quite cost effective.
Of course. No, I can remember once upon a time actually having someone that was purchasing gold here in Australia and then they would sell it in Europe. And so part of their issue was that they had to basically do a hedged position on the Euro-Aussie conversion so that no matter how long it took for the gold to get from Australia to Europe, they wouldn't get, you know, sort of short-changed on the actual physical value of gold in case there was a fluctuation just on the currency side. But that seems to be really arbitrary when we consider how much we've seen gold and silver fluctuate in 2020 and now again in 2021. Do you have any thoughts about what's gone on with gold pricing and silver pricing over the last sort of year?
Yeah, sure. if we go back to the start of the COVID crisis back in early 2020, both metals were sold off with basically everything at that time. You can remember the chaos and equities were going
I had
crazy.
a lot of fun on the desk.
Yeah,
short positions all the way through.
Just short everything. So they found a pretty convincing bottom during that sort of February, March 2020 mark. And then both metals had a really good calendar year. So gold in Aussie dollar terms was up 13% roughly. Silver was up about 34% for the calendar year. So if you think about, from a long-term perspective of our clients holding the metal, last year was definitely a great year for them. What's happened now is after peaking in about sort of August of 2020, the gold prices come off again. You've seen bond yields start rising. That's put pressure on the gold price, and you've seen some money flow out of gold. There would have been a lot of profit taking after such a run up as well. So currently we're in a bit of a downtrend, and we've got investors that are kind of like trying to pick the bottom at the moment for gold, assuming that we're going to turn around. But that's where we are at the moment. It's after such a massive year for 2020, it does make sense for the price to ease back a bit.
Absolutely. I mean, I've actually seen just in the last 24 hours that Warren Buffett has sold his take in Barrick Mines. So we're likely to see a little bit of a fall down on that front, in my belief. Yeah. Now, when it comes to gold, do you have a price in mind that you think is reasonable? Because if we actually look at what goes on with gold over 5,000 years, both gold and silver are 5,000-year-old asset classes. And right now we're at about a 64-to-1 ratio on that gold to silver ounce. Previously last year, I think the peak was about 124-to-1. Yep. Now, during historical, if we put an average on it, it's actually closer to 16-to-1 as the sort of standard at that, or the gold standard, which I think I'm allowed to say at this point in time. Now, if that's the case, what do you think that one of these could be overvalued or one is undervalued? Anything along those lines that sort of makes a little bit of sense?
When you think about the gold-silver ratio, historically, if you look back, as you said, 16-to-1, if you go back far enough, it is around that as an average. I tend to look at it like over the last sort of 30, 40 year period. Because if you look at that period, it's kind of a decent chunk there where you've got all of the technology when it comes to mining and so forth, and that's a pretty long-term sort of range. And if you look at that range, the average for the gold-silver ratio is closer to around between 40 and 50-to-1. And that would be my sort of target of where I would expect the ratio to get to again during this cycle. So what you see is during a bull market in precious metals, it usually starts with gold and then silver usually follows after and plays catch up. So like we saw recently, gold up last year, 13%, silver up 30%. After such a, kind of terrible period for silver performance in the previous years, it makes sense for silver to kind of come and outperform gold over the next few years. So that's the way I see it. I don't know if the ratio will get back to 16-to-1, but I mean, if it does, it's going to be a tremendous bull market for silver.
I mean, in my mind, when it comes to that 16-to-1 ratio, what you've said has actually stood out to me. It's quite profound, where we should really focus on the most relevant parts of history. We've got 5,000 years of this asset class, but the technology has changed enough to warrant, or circumstances have changed enough to warrant the idea of looking at maybe a reduced focus or a smaller scope. Now, do you find, I mean, obviously if you're thinking that there's going to be a lagging side from silver to sort of start coming up a bit here in this instance, you have a bit more of a preference to hold silver personally than what you do gold? And is there more than just that as a reason, or do you have some other side of it?
There's a few reasons to like silver at the moment. It's getting a lot of attention in the media. There was recent articles around the silver squeeze and that sort of thing. But I think the more broader picture for silver, one, you've got the ratio there, the historic sort of ratio, where if that reverts back to the mean, then obviously silver's going to play catch up to gold. Second to that though, you do have a lot of tailwinds for silver when it comes to industrial demand over the next few years. If you look at solar PV production, silver's using solar panels obviously, so that's a big driver for industrial demand. If you look at the projects that are coming up, you've got in the US, you've got trillions of dollars now committed under Biden for renewable energy spends. You've got China as a massive solar producer over the next few years. You've got another one is in Brazil, a massive solar plant that they're building. So you've got industrial demand for solar PV. You've also got industrial demand for electric vehicles because silver's used a lot more in electric vehicles than it is in the older combustion engine
particularly
vehicles.
with lithium batteries and all those sort of things as well.
And you see that with Tesla growing. You see a lot of car makers now changing from that ICE, engine to newer electric vehicles over the next 5 to 10 years. So if you think of silver as like a really long-term investment, the next 5 to 10 years look quite bullish from an industrial demand perspective.
So can we consider silver to really be more of an industrial store of value rather than a precious metal in comparison to what we see with gold?
Yeah, you can. So silver's more of both. The way I see silver is both a commodity and a currency, or as money. It is a monetary asset. People hold it just as a store of value, similar to the gold. But because of the fact that gold doesn't really get used up in industry, it's more of, as you mentioned, a 5,000-year-old currency that you can hang on to for your whole lifetime, basically, right? Silver does have that element of industrial demand that affects the price. So, but that's why it's interesting. I think it's everyone should take a really good look at silver for the next few years, I think. Yeah.
Absolutely. So, I mean, really, at the end of the day, we've kind of got silver as being more of an industrialized product. What are some of the uses that we might find in gold?
Yeah, so gold typically is, if you look at the market and broke it down, about a third of the gold market is used in jewelry. So particularly in like those, India and China and that sort of thing, a lot of the gold demand that comes from those countries is actually for jewelry products, and that's how they store their wealth. They have quite low costs of production for jewelry. They can buy it relatively close to the spot price. So you've got the whole jewelry market that makes up a decent chunk. Second to that, you've got central bank demand for gold. Now, lots of central bank demand over the last few years for gold because they look around at currencies and, you are at risk if you're holding a fiat currency for over the long term, right, for 40 years, because you've got inflation, they're always losing value. So gold plays a big role in central banks' reserves. So you've got that demand factor. And the other one is just investment demand for gold, really. Bars, coins, and that sort of thing. So
if we were to think about gold, particularly from that central bank perspective where they are storing a huge amount and huge quantities of gold, traditionally they've been, the more stimulus they start to throw out, the more they want to absorb that gold and keep a storage of it. And it's not usually until they start tapering off on that stimulus that they start offloading it because they want to start investing elsewhere. Yeah. Now, do you see that with what we're seeing in the US right now, with stimulus coming in left, right and centre, and Biden's new $1.9 trillion stimulus package, that at some stage, once the money sort of does eventually dry up, which at this stage we're still in a sweet spot for markets, but does that mean that sweet spot's going to remain for gold as well? And is there concern from the gold side of and the value of gold as a store that when it does taper off that we might see a decline in value, or do you think it will still continue to rise because there'll still be that demand to offset protection against currencies? Yeah,
I think talking about central bank demand over the next few years, one of the interesting things to look at the moment is the way the US bonds are selling off.
Yes.
So, and you've got to break it down by each central bank and look at them individually. So I think we're going to continue to see central bank demand from China and Russia and the like, because they look at it and go, actually, you know what? I'm not going to hold US dollars, or I'm not going to increase my US dollar holdings. I'm more happy to increase my gold holdings during this time if they think inflation's going to start coming up again. So,
well, I mean, this is where a lot of the conversation has really been in the past week, has been around the idea of the more bonds rise in value, the more we want to see a risk-on based asset happening. So, gold as a haven of sorts, is that, something that you imagine as being still here tomorrow, or is it something that we are going to end up seeing? Obviously, if you can get a return or a dividend or a yield from a bond, then naturally it makes sense to sort of go after that as opposed to keeping a store in value, which really, on the gold side of things, becomes a bit of a speculative asset class. So, how do we sort of make that picture, and how would people who might be investing in it want to think about that?
Yeah, I think the way to think about gold moving forward is, although we've seen it come off in the recent months due to bond yields rising, I think one of the most important things to really follow is inflation. And the thing is, inflation, once it starts, it's very difficult to control, and we're kind of seeing it creep up a bit. You've got all this stimulus going on. You've got the governments out there spending a lot more than what they're taking in tax revenue. Government deficits are going through the roof. So if you look at the long-term picture, you've got this huge build-up in debt, right? Huge build-up in corporate debt, huge build-up in government debt. Now, a lot of that, the only way to pay for that is to monetize the debt, and that is to basically have the central banks come in and buy those government bonds and essentially destroy the purchasing power of the currencies that they're nominated in. So I think the story around owning gold hasn't changed at all. And I think it won't change over the next sort of 10, 15, 20 years, or however long investors are willing to hold it. So yeah, it's still a safe haven after 5,000 years, so I think it'll be for the next 1,000 years as well.
Thank you very much for your insights today, John. I am looking forward to having a much deeper dive into the physical realm of gold, and I'm sure many of our viewers are going to be as well. But here's Philippe. It looks like he's going to try and lock me in the vault today, but I'm hoping I don't have to be worried about that too much.
I'll try not to lock you in, but it is time for the vault to close.
Okay, brilliant. Well, thank you very much for all of your assistance today, guys, on getting into the nitty-gritties of gold and the vault itself. Now, naturally, anyone who would like to get in contact with Philippe or John, I will make sure their contact details are available for you at the end of this video so that you can have a look and maybe talk to them about getting some physical gold or silver for yourself. Have a great time, and I look forward to speaking to you all again.